Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. In the absence of authentic data and also due to the arbitrary and opaque regulations of China, which happens to be a nation without a constitution, the ownership and financial health of Chinese corporates has always been a mystery, which explains the sudden changes and the sudden collapses that takes place among corporates there. We saw how giants like Alibaba and Tencent were cut to size last year, as also the sudden crackdown that took place on Chinese companies in the e-com, gaming and education sectors, which wiped out tens of billions of dollars of shareholders' wealth there. And now, another Chinese company is on the brink of a collapse. It is on the brink of a failure, this time not due to the whims and fancies of the Communist Party of China, neither due to whims and fancies of its autocrat Xi Jinping, but because of a huge corporate debt which has become unsustainable and unserviceable due to a slowdown in the Chinese real estate sector. Evergrande is China's second largest real estate company, and it has the dubious tag of being the world's most indebted private entity with payables of over $306 billion to various banks, to various lenders, vendors, creditors, financial institutions, pension funds, etc. Evergrande was formed in 1996, and with sales of $110 billion last year, it was China's second largest property developer. While it dawdles today, it has 1,300 unfinished projects in 280 cities and small towns of China, towards which it owes these $300 billion to over 128 banks and 121 other institutions. Perhaps no one has been spared by Evergrande. It also owes $19 billion towards foreign currency bonds, whose investors include the biggest names in global funds, including Goldman Sachs, UBS, HSBC, PIMCO, Blackstone, BlackRock, and Ashmore, among others. All has not been good for the real estate company, with sales and profitability declining consistently during the past few years. The slowdown in the real estate sector triggered Evergrande to even divert resources and invest in companies in insurance, property management, movie streaming, and also in the manufacture of electrical vehicles and bottled wet water. These investments failed to improve the financial position of Evergrande, and it continued to go downhill. A leaked letter in September 2020, which the company says later was fake, shows the company pleading for government support in order to tide over its financial crisis. The company, of course, knew that things were deteriorating and did not really make a clean breast in September itself. While no such support came from the Chinese government, it later did raise money on its own by selling its electrical vehicles unit for $3.4 billion and by listing its property unit on the Hong Kong Stock Exchange in order to raise $1.8 billion. But these amounts are tiny and insufficient relatively as compared to its mammoth debt of $306 billion today. The financial woes of Evergrande came out in the open in June this year when it failed to repay commercial paper loans on time. And then it was evident in July also that things were not good when its deposits of $20 million were seized in a coercive recovery by a bank. A couple of weeks ago, the embattled company announced that it may be unable to make bond interest payment of $83.5 million falling due on 23rd September, which is today, and another $47.5 million falling due on 29th of September, which is just after a few days. No wonder its bonds, which used to trade at 90 cents to a dollar in April, have crashed to 25 cents to a dollar now. And after its rating downgrade and perhaps possible default, there will be few takers for these bonds in China as well as worldwide. The chances are that with nudging by the PBOC, which is the People's Bank of China, which is the Chinese banking regulator, the lenders may agree to postpone the immediate interest payments in order to stave off the crisis. But that to us is just a temporary quick fix, which will not resolve the overall crisis, and it will not be enough to prevent the collapse of Evergrande. It will certainly be a shocking and stunning collapse of the real estate giant in case it is unable to raise funds to repay its loans. Its CEO, however, is confident that the company will walk out of its darkest moment soon and that it will deliver property projects as pledged, as promised by it, that it will fulfill its responsibility to property buyers, to investors, to partners, and other financial institutions. While some think that it will be a catastrophe that will roil the entire real estate, banking, and financial system of China, Standard & Poor does not think so. S&P says that there will be no tidal wave kind of an impact due to the default by Evergrande. It thinks that the hit to the financial system from Evergrande alone will be manageable and will not be catastrophic. Whether it proves to be a tidal wave or whether it proves to be catastrophic or not, the Evergrande crisis, which amounts to 2% of the Chinese GDP and which amounts to 4% of its overall real estate sector, is too big to ignore. And it will thus need deft handling by the regulators and by the government there to ensure that its contagion and spread over does not really take place. The IMF's chief economist, Geeta Gopinath, believes that the Chinese government has the tools in order to prevent the Evergrande situation from turning into a systemic crisis. The tools to us include directing the lenders to restructure the Evergrande debt and give it further time for repayment, which is roll over the debt, or merge the company with a much stronger entity, which in all likelihood would be an entity owned by the Communist Party of China or by the PLA there, or to give it emergency loans as a bailout, or if nothing works out, then finally manage a smooth bankruptcy of Evergrande. While one would naturally expect the Chinese government to immediately bail out Evergrande and stabilize the system, experts think otherwise. They say that China would want to show to the world that it can manage a financial crisis prudently and without damaging fundamental trust in its governance and in its markets, and that would not be so in case it moves into the bailout. Reports say that it has been directing lenders to restructure and roll over the Evergrande loans and give it more time, and that the PBOC, which is the banking regulator, has pumped in $20 billion in order to stabilize the Chinese financial system and avert any kind of a contagion effect on it. No wonder the latest news is that Evergrande has managed to privately negotiate a deal with its domestic bondholders whose interest was due today, such that it has bought more time, and that of course has prevented the immediate and imminent default that was to take place. This to us is just a temporary respite which will not improve Evergrande's financial health or provide it with a much needed long-term viable restructuring which is needed to ensure that the company survives and does not collapse and impact the entire system there. The markets may have stabilized for the moment, but jitters remain and they are on the edge. A domino effect may have been stalled at present, but the chances of a contagion, the chances of a cascading effect remain, whose fears have not receded from the domestic and from the global markets. The fact is that Evergrande is deeply entwined with China's broader economy, including the banks, the financial institutions, retail investors, household buyers, construction and infrastructure firms, and its failure, if any, can badly impact global commodities demand, and therefore the fears of an overall contagion have kept the financial markets on the tenterhooks. The potential collapse of Evergrande amidst a slowdown in China's real estate market will have an adverse impact on many fronts. Let's discuss them. The first one, there are 60 to 65 million unsold residential units in China with a total debt of $4.5 trillion to the overall sector, of which $209 billion is owed to foreign lenders, foreign investors and bondholders. The real estate sector is a preeminent one for the Chinese economy and it contributes to 29% of its GDP. The Evergrande crisis has cast a doubt on this huge sector and a pullout by lenders and investors is taking place and that needs to be prevented. The second impact, it will cause widespread bankruptcy and corporate and company failures in China. That too, amid small vendors, suppliers, and contractors to the Evergrande projects and other real estate entities in case its collapse is not averted. It has already caused tension and turmoil in related industries of steel, metals, and cement, not just in China, but also in other countries from where it imports these items. The next one. At risk are also the jobs of employees in the real estate sector there and also of contract labor used at construction sites. Evergrande alone employs 3.8 million such labor per year at its construction sites, and those could be at risk in case the company collapses. There will be a sell-off of equity and debt in real estate and related sectors. While shares of such companies have fallen in China by about 10%, the impact even came on shares of companies like Tata Steel, JSW, and NMDC in India, and on shares of companies like BHP and Rio Tinto in Australia. All of them have had an exposure to China in some form or the other. And finally, it will only further drag down China's property sector and its overall economy too. The Evergrande episode is like the Lehman Brothers episode in US or the ILFS crash in India. It needs to be handled carefully. In case it doesn't, it will certainly have a cascading effect, which is not going to be good for China and also for all other nations which are entwined with China's real estate sector in particular. This is Akhilesh Bhargava signing off till we meet again. Namaskar.